PK here, sitting in the swing in Florida. Afternoon, it's about 86 outside. Let me take my glasses off as usual because I can't see. These stupid glasses, my eyes, they just don't have it. Anyway, what we're going to talk about is actually the third category in the trading, which is what about options? What about these options? Let me just bring this a little bit better. There we go, much better. As you guys know, I got 35 years trading experience. Started in 82. I'm 60, going to be 62 this year. I'm going to break it down really to three different areas in trading options. Number one is futures options, because this is my main focus. I've been a futures trader for most of my life. Get my notes here. What have I done with the futures options? It's called writing combinations, where you have it's when you sell a put and a call, both out of the money. You can do this I recommend this in the stock index futures, but it's not so easy. You can make money, but you got to watch it, especially to the downside, especially when you sell those puts. If something happens, you really can get in trouble. I recommend using a stop on the sell side. When you're selling the put a stop in. But that's the only thing I would write combinations on are stock index futures, because there's big volume and the spread won't kill you. Now listen, if you're looking to take a gamble, it's a real gamble, but you really want to try to make some money. There's two plays in the commodity options, which are, I've yet to succeed at this, but I do follow it. I've made money in the futures in both, which is you want to be in the orange juice or in the coffee. These are seasonal plays, and what you're hoping for is a freeze. The problem with the futures, you have the much bigger leverage, unlimited risk to the downside. So what you can do is, remember, you're looking for that freeze in Florida, and you can buy a call in the orange juice futures. There's no volume. Buy it for 3 months out. You would need to buy it, I would say, probably sometime in the first week of December. Go for a couple of months. You're looking for December, January. Maybe in the last 30 years, we've had 3 or 4 freezes. But if you catch it, when you have limited risk, you know what you're going to risk when you buy a call. And then there's also a coffee option, which is in our summer. The coffee can have a freeze. It hasn't been in a really long time, but when there is a freeze in Brazil, this is another way instead of going long the futures contract. But it's a real speculation. You can take a small amount of money and maybe do it every year, and there's really a lot of luck in it. There are some people, they have these, you can sign up for these weather forecasters that specialize in the Florida orange juice market and the weather and their predictions if this is going to be a freeze season. But you're looking for a freeze in the OJ and the coffee. And those are really the two plays in futures options. One thing you see this strategy, and it's very tempting. It's you see it in the stock index futures, mainly. Again, and do not do this. This is the fastest way to go broke, which is don't sell way deep out of the money options. I'm not on the sell side to try to make that income, because what happens is you're going to win for 6 months, 8 months. You're selling them like using the S&P, 100, 150 points out of the money, and they always expire wordless, and you keep winning and winning and winning, and then all of a sudden the market goes crazy, and usually, of course, you can sell the combination, but this deep out of the money strategy, everyone gets attracted to it because you're constantly winning every month with 4 to 6 weeks to go. And then all of a sudden the market gets crazy and gets wild, and you lose everything, all your profits plus more, because you could really, the volatility can pick up and you can just bury yourself. So that's pretty much for the futures options. Let's talk about the stock options. One of the most common strategies, I'm not a real stock trader, but I follow this thing, are people who are long a stock, and they do what's called a buy right. They sell puts to try to gather some income, but they're planning on keeping the stock. And if the stock comes down, they don't mind taking more shares if they don't make any money on selling those puts, don't collect income. But I like the strategy. I think if I was a stock trader, I would do this, especially when you have long-term positions. You know you're going to hold them for years. I happen to like this strategy. I think you can make some extra return this way. It's very popular. You can read about it. And then again, if you're looking to, we're all looking to make that fast money. Who doesn't want to win quickly? And where's all the action in stock options? It's always around those earning reports. The big mistake is going long the stock or going short the stock before earnings. You can't control the risk. So the way to play this, if you have a feeling about Apple or something, Yahoo or Facebook or Google or any of these stocks, big companies that can really move after an earnings report, a way to to execute that trade is you want to buy a call or buy a put with less than a week to go, because then again, if it doesn't work out, you have a limited risk on the buy side and this unlimited profit. This is the way, if you're one of these people that want to take some risk on and really try to make some money, this is the way to do it, by buying calls and puts the day before the earnings report comes out. That's it. Oh, here we go. And then the third thing, which is just recent, this last 6 months, if I was a young person like you, I would be on that Wall Street Bets on that Reddit forum, and follow what everyone's going to jump in. These people have proven they can move that market. They move GameStop, AMC. They move silver $3, and we read, you really can make a lot of money. And again, this is something you can buy some options in if you don't want to buy the stock. And if they hit it, because it got so many followers, this is really like the new game in town, is doing this. If I was younger and in your generation, this is what I'd be doing. I'd be a member of that Wall Street Bets and scanning and see what people are in. And of course, using my skills, all my experience as a trader, and looking to buy some stocks, but mainly on the option play regarding that. So I think this is the real, this and buying those puts and calls a day before, 2 days before, especially the day before the earnings reports come out every 3 months. There's something that's really worth studying, especially if you really know the stock, the underlying stock. And then the third technique, maybe you've read about this. Of course, it comes from Nassim Taleb, the Black Swan, about I call it the Black Swan approach. Is what it is you're going to take 90%, 95% of your money. Well, when interest rates were higher, put it in fixed income or in cash. You take 5% and buy deep out of the money puts. And what you're doing this. You're always in the market. And what you're hoping for is that black swan event, that disaster, like what happened in March, April. You probably read about one of this universe hedge funds. The guy made billions, his biggest trade of his career. but you never know when they're going to happen. So you might lose. This way nobody could do it, because you're going to be losing year after year after year. I mean, think about it. How many disasters have we had in the last 30 years regarding the stock market? A real big drop. It has to do with the downside. And this is buying way out of the money calls and always being in, because you can't predict when that disaster is going to happen. You have to be in, and they're very, very cheap. Especially in times like now with the VIX is 16, 17, volatility is low. But that's really it for the options, as I said, in the futures and stocks. But I think overall, this, trading options is really a glorified way of gambling. And I've never really, unless you're a member of the floor in the options exchange in Chicago, and you really are mathematically oriented, and you know all these type of butterfly spreads, all these type of spreads, I don't think this is the way you should put your focus on. This goes also with penny stocks. So that's why I never, I did some options for about a year. I made some money, but at the end of the day, I ended up giving a lot back. I got stuck in one of these. I wrote some currency options and the futures, and same like I told you. So the whole thing, really, I thought pretty much was a waste of time. But again, in this generation, if I was to go back to trading options, I'd focus on the Wall Street Bets group, the Reddit group, and see what they're doing, like what happened in the GameStop and so forth, and doing these earnings play. If you have some feeling you're following the stock, Apple, whatever it may be, and you think the market's really gonna move, and it is, you're able to take that position which you can't do in the stock, and then get out the next day, and really make a lot of money if you're right. But remember, in options, it's about the timing. You got to be right, and that's why I consider gambling. So anyway, this PK here with out of the box, and our options worth it. Only the two I mentioned. Wish you a great day. Talk to you later. Ciao, you guys.